My next guest has been following the China story for investors around the world for the past several years. He's Donald Straszheim, Senior Managing Director of the ISI Group, and he joins us today from Los Angeles. Don, welcome back to Bloomberg News. Always good to have you on.
Thank you, Mark. Nice to be here.
Don, you have been cautious on China recently. Why?
Well, there is a whole host of bad economic data coming for China. We got the first piece of it last night. The consumer price index was 3% in June, year over year in China. That's their annual target. It was 3.6% in September. Last night, 4.4%, driven by food. It's going to be over 5%. Money growth is a little too hot. China is going to have to raise interest rates, tighten policy in the face of higher inflation. That's no good for equities.
Don, about how many interest rate hikes are you expecting out of China?
Well, I think we'll probably see one hike still this year. We've already had one just a month or so ago. One more in the first part of next year. And then we'll have to kind of watch and wait and see how the economy proceeds. But there are clearly more tightening moves on the way and without much delay as well.
Don, I'm sure you're aware there's been a lot of criticism of the Chinese, a lot of folks saying that perhaps they're the primary cause of global economic imbalances. Is that a fair criticism?
No, I don't think that is a fair criticism. There is plenty of blame, Mark, to go around us, China, and many other places in the world. This G-20 meeting that they're having now, there is not going to be any agreement that is anything other than empty words. China is not about to sign on to any kind of policy that constrains them to following some particular future course of action, nor, quite frankly, will America or any other sovereign nation. It's good to get together and talk, but there's not going to be any solid agreement come out of this.
Don, I was just asking Nick Benenbrook of Wells Fargo this question as well. If nothing's going to come out, of it, then why meet in the first place?
Well, something does come out of it in the sense that people exchange views on matters of important, common interest. But what people need to remember is that the G-20 has no enforcement mechanism. It's a group of people who get together and try to reach agreement. But if they can't reach agreement, then in that sense, nothing happens. And the countries are so diverse.
Yeah.
You've got the BRIC countries who are very much poorer, and the developed. They're very different. No agreement.
Don, you've heard this criticism coming from the Chinese as well. They're not too thrilled with quantitative easing. Is that criticism picking up steam with other countries as well?
It looks to me like it is. I will tell you, Mark, there is not a solitary person in China who thinks that quantitative easing is a good idea. And there's not a solitary person in China who believes Treasury Secretary Geithner when he says we're following a strong dollar policy. No one in Asia believes that.
Has the People's Bank of China taken the necessary steps to pierce what many are seeing as a housing bubble there? Are they doing enough on that front?
They're getting there. The real problem, though, is not so much the speculative bubble at the high end. People, hedge fund managers from London and New York coming and bidding up prices. The real problem is there's an absence of maybe a shortage of maybe 5 million houses under construction every year.
Yeah.
They're building 5 million. They need 10 million. That's why prices are rising.
Don, in our last 30 seconds, is there a long-term investment strategy for China that makes sense?
Oh, I think so, absolutely. But you've got to just watch these cyclical ups and downs. But commodities, energy, China is going to remain the driver of those sectors as far as the eye can see.
Donald Straszheim, Senior Managing Director of the ISI Group, joining us from Los Angeles. Don, always good to have you on. Thanks so much. Appreciate it.
Thank you. You bet.